Every business transaction includes an important financial component, taxation. Whether purchasing goods or services, taxes play a crucial role in determining the final cost for consumers and the amount businesses must report. Tax rates vary across different countries and states. For this course, we will follow the tax regulations specific to Miami-Dade County. In Miami-Dade County, the local sales tax, LST, is 1%, which is added to Florida's statewide, ST, 6% sales tax, making the total sales tax rate 7%. Understanding these calculations ensures accuracy in pricing, prevents errors in financial reporting, and facilitates compliance with tax regulations. Forward tax calculation process. Determine subtotal amount. Determine the total pre-tax cost of the purchased items by summing their sales prices. Calculate state tax. Multiply the pre-tax amount by 6% to determine the state tax portion. Calculate local sales tax. Multiply the pre-tax amount by 1% to determine the local tax portion. Determine total amount. Add the pre-tax amount, state tax, and local tax to get the final invoice total. Scenario: purchase in Miami. A customer buys an accounting book for $50 and an accounting software for $150. Step 1. Calculate the subtotal. $50 plus $150 equals $200. The subtotal or pre-tax amount is $200. Step 2. Calculate state tax, ST. Miami follows Florida's statewide sales tax of 6%. State tax amount equals $200 times 6% equals $12. Step 3. Calculate local sales tax, LST. Miami-Dade County imposes an additional 1% local surtax. Local tax amount equals $200 times 1% equals $2. Step 4. Calculate total tax and purchase cost. Now add the state tax and local tax. Total tax amount equals $12 plus $2 equals $14. Total amount paid equals $200 plus $14 equals $214. So the final price the customer pays after taxes is $214. How to compute the pre-tax amount when only the total price, after tax, is known. Understanding the reverse tax calculation formula is essential for determining the original price of an item before taxes were applied. This method is particularly useful for businesses, financial analysts, and anyone dealing with tax-inclusive pricing. By reversing the tax calculation, we can break down the total cost to uncover the base price and the exact tax amount. Let's dive into how this formula works. Reverse tax calculation formula. The pre-tax amount always represents 100%. The tax rate is added to this pre-tax amount, in this case, 7%. As a result, the total price after tax becomes 100% plus 7%. Converting 107% to decimal form gives 1.07. The basic formula to calculate pre-tax amount is total price divided by 1 plus tax rate. For Miami's 7% tax rate, the formula will be pre-tax amount equals total price divided by 1.07. State tax portion. This isolates just the 6% state tax component from the total amount. The formula is total price multiplied by 6% divided by 1.07. Local tax portion. This isolates just the local tax component from the total amount. The formula is total price times 1% divided by 1.07. Here's an example of how to compute the pre-tax amount when only the total price, after tax, is known. Scenario: reverse tax computation. A customer paid $214 by check in Miami, Florida, where the total sales tax rate is 7%, 6% state tax plus 1% local sales tax. We want to find the pre-tax amount. Step 1. Use the reverse tax formula. Since the total price includes tax, this means the final amount includes both the original sales price and the added tax. That is why we must divide total price by 1 plus tax rate. Plugging in the numbers. Pre-tax amount equals $214 divided by 1.07 is equal to $200. Step 2. Verify by calculating the tax. Now, let's check the tax amount. State tax, 6%, equals $200 multiplied by 6% equals $12. We also can use this formula. Total price multiplied by 6% divided by 1.07. $214 multiplied by 6% divided by 1.07 equals $12. Local tax, 1%, equals $200 multiplied by 1% equals $2. We also can use this formula. Total price multiplied by 1% divided by 1.07. $214 multiplied by 1% divided by 1.07 equals $2. Total tax equals $12 plus $2 equals $14. Step 3. Confirm total. Final price equals $200 plus $14 equals $214. So the pre-tax amount is $200, the state tax was $12, and local tax paid was $2. Key takeaways. The formula for forward calculation. Add 6% to pre-tax amount. Sales price multiplied by 6% equals state tax. Add 1% to pre-tax amount. Sales price multiplied by 1% equals local tax. Add ST and LST to pre-tax amount. Sales price plus ST plus LST equals invoice total. Reverse calculation. Divide total by 1.07. Invoice total divided by 1.07 equals sales price. Multiply sales price by 6%. Sales price multiplied by 6% equals state tax. Multiply sales price by 1%. Sales price multiplied by 1% equals local tax. Tax calculations are essential for businesses and consumers alike. Knowing how to compute tax on invoices ensures correct pricing, while understanding reverse tax calculations helps when dealing with total amounts that already include ST and LST. By mastering these formulas, accountants, business owners, and customers can accurately determine prices, taxes, and original costs with ease. Thank you for watching. If you enjoyed this video, don't forget to hit that like button. It really helps the channel grow. Share this with your friends who might love this too. And if you haven't already, subscribe and turn on notifications so you never miss out on exciting new content. Your support means the world to me, and I can't wait to keep bringing you more.